All right.
We are live, it seems. How are you guys?
I'm
Almost.
doing awesome. How are you? My two favorite brunch partners whose names start with a vowel.
That's right.
Always the most creative introductions, Brian. Thank you so much.
Absolutely.
All
I
right,
am just sharing this so that so I can be live on mine as well.
I am too.
let's take a second and do that, and we will start recording as well. We don't want
Perfect.
to miss the record. Here we go. Yes. So how's everybody doing?
Awesome. I am doing fantastic. It has been a busy week, but a good week overall. I'm excited about the topic we're going to be looking at today. How about you guys? Oh, and the other thing is I've been doing this crazy new workout in the mornings, and that's really been challenging me, which has been a lot of fun. How about you guys?
I just joined the workouts. I just joined one session so far, but I'm excited to be doing more of it. I find that when you start your morning with a challenge and with an activity, it has a spillover and ripple effect throughout your day. And I'm super excited for the topic you have prepared for us today, Brian, because it's so timely and thought provoking and stimulating on so many levels. And I can't wait to hear what you have to say on it.
Cool.
I
Thanks.
couldn't, I couldn't agree more. I think if somebody's looking for something a little different, a paradigm shift, looking at things from a new lens, this is the topic for you. I'm really excited to be a part of it and to learn from you, Brian. I know that you have a lot to share with us and a lot to teach us. So I can't wait. And how do you want to start this, Brian? Where do you want to start from?
Well, the first thing I think I want to mention, because we've been talking about this a little bit this week, is this is a fairly conceptual topic with a lot of things that I want to share. So you guys are going to be like my audience, who are going to ask questions, and hopefully that's going to help, the rest of our audience, people that are on right now and listening, and then rewatching this video. I'm kind of using you guys as test subjects, so you can answer me or ask me some questions as we go. But I mean, basically, what I wanted to talk about and what I've really noticed for myself is just, this health crisis that we've been in now for the past month and a half, 2 months, and in some cases longer around the world. It has spotlighted some of the weaknesses or the vulnerabilities in the worldwide health system, right? And it has wound up spoiling the illusion of safety and security that a lot of people had about our health systems, like the fact that the hospitals were not able to deal with how many people would be coming, and healthcare workers didn't have access to equipment and protective gear. And these are the sorts of things that we were finding out about, even though experts had been talking about the fact of a global virus type pandemic for years and years. Like, this is not a new concept that came out of left field. This was something that people had been talking about, and yet we were caught off guard across the world in our health systems. But what I then noticed and want to talk about today is a similar thing has happened in our financial systems. So, this health crisis has brought on a financial crisis at the same time, and that has exposed a whole bunch of the vulnerabilities and weaknesses in our overall financial systems and even in our individual household systems. And again, it has pricked that illusion of safety, of financial safety and security that a lot of us have. So that's what I want to talk about today, specifically how that shows up in individual people's households. And then we'll talk a little bit more about on a global standpoint as well. But I know you guys had a couple of questions to start off around this. So Asil, why don't we start with you?
Sure, I actually find this very timely and fascinating because it keeps it starts. I'm worried about it starting a rabbit hole where you start just thinking to yourself, okay, well, what do I do with this information? But before we even get there, we need to ask the right questions to help us clarify what is the picture we're looking at. So my question to you, Brian, is what are the most important questions people need to start asking themselves right now?
Yeah, I mean, the biggest one, what we talked about before, is they are around like, how am I going to get through what is going on right now? Okay, but another question, which might not be the high priority for everybody right now, but it's still an important question to ask, is like, what are things that I can do so that I don't wind up in a vulnerable position again in the future? I mean, right now we're kind of at that, you know, across the world and here in Canada and the US, they're talking about opening up the provinces and the country again and trying to get back to normal. But there's also another group of people that are saying this is not a good idea and this could actually lead to a second wave or more worse or whatever. And even if that doesn't happen, which I hope it doesn't, there's still the financial aspects. Like, this is the financial impact of shutting down the country for 2 months is going to be ongoing, you know, potentially for the rest of the year and even beyond. They're talking about Canada going into a recession. So the big questions at this point become like, what can I do so that I'm not caught up in this like so many people have been, you know, in the previous months? And that's some of the things I want to talk about today. What are the things that could affect me or will affect me if I don't take certain steps? Now, Omar, I know you had a really interesting sort of comment / question about a conversation that you had with a friend.
Yeah, I do agree with Asil. It's very timely to talk about this because I was on the phone with a friend yesterday, and he was talking to me about he has 3 brothers in Lebanon, and he was telling me about how the media's portraying the situation to be very, very serious, but that in on the ground, like what people are experiencing is far more serious than what the media is portraying. And he's talking to me about his brother's experiences. Uh, the country, Lebanon, has, you know, you're talking about cracks that are forming. The cracks in Lebanon are far larger than the cracks here in Canada. And you have the currency, which is plummeting. You have people who are losing the scarce number of jobs that are there right now. Those people, the people who thought they were secure, they're also not secure. Nobody's secure there. The banks are forcing and seizing people's money. It's revolts and people are just on the streets rioting against what's going on. And this gives us perspective of what may happen if these, you know, if we don't get educated and if we don't understand the other side and understand what are the other perspectives and ways and that we can think about this and where we can go to, I think we may find ourselves in a situation that's very similar. So I do agree with Asil. It's very timely, and the topic, if for those who start thinking about this now, are going to have they're going to have other ways to be able to deal with this. And I'm very curious to be one of those people and learn from you, Brian.
Yeah. Actually, you inspired me to add this comment, Omar. You know, as a financial planner, I dealt with clients from all over the world, and clients who came from countries like Greece and Italy and places where the banking systems and the financial institutions aren't so stable. They always struggled trusting the system here. And one of the things that we would tell them in the bank is that this is Canada. You know, these are things that, you know, the Canadian financial system is something to be trusted, and the markets here are just different. And there's just this notion that banks here are stable and the financial system here is secure. And what you're telling me, Brian, is that may not be the case. What you're telling me is that while the problems here aren't as obvious as maybe other places in the world, there's still cracks in the system that are serious. And then we need to be talking about. So is that what you're saying?
Absolutely. You guys hit the nail on the head. I mean, you know, places like Lebanon, Greece, some of the countries in South America, some countries in Africa that have experienced exactly the things that you guys are describing. We tend to sit here and think that, you know, oh, well, we don't have to worry about that. It's not as big of a deal here. We've got a good, stable financial system, banking system, and all of that is true. I mean, we see the difference between what happened in Lebanon versus what happened in Canada, right? Immediately, our government and the banks moved in with programs and assistance and all this sort of stuff. And we're so lucky and fortunate that we do have that. And let's say this lockdown had to go again for another 3 or 4 months. How long do you think it would be before we started to move in that sort of direction in Canada? How long would we be able to last? I know I saw clips from what was going on in the US of thousands of people lined up on the streets for blocks and blocks and blocks all shoved together, right? Like they look like they were lining up for a Rolling Stones concert, and they're lining up to sign up for EI. And that's in our neighbor, who's also, you know, the superpower of the world and considered to be a very stable country. So I don't want to, I'm not here to you know, like start getting, you know, add to the panic and get people afraid and that sort of thing. But it is this, you know, I guarantee you the people in Greece they were living in an illusion of security as well up until things happened, right? Like they thought they were fine. They thought everything was good. They had faith in their systems until it was too late, and then they didn't anymore, right? So that's what it's about, is building awareness so we can just sort of keep an eye on this sort of thing. And then the ultimate question is, well, what can I do as an individual so that I am more prepared if and when something like this happens again? Do we think that this is the last crisis we're ever going to see in our lives? No. And there were people that were already in financial crisis before COVID-19 and all this, because of some of the things that they were doing and not doing in their own financial household, which is, you know, what I want to start getting into. So let's launch into that right now. So, I mean, you know, if we just go back a few weeks here in Canada, millions of families in Canada suddenly found themselves in extreme stress and panic and freaking out when their only source of income, which is typically their job, or if they had a small business, their small business, suddenly went away, suddenly dried up upon the lockdown, right? Most of us are living in this illusion of security that as long as we have a job, we're fine. And we will be able to pay our bills and take care of our family and do all the things that we need to do. But this illusion of safety and security of if you have a job, you are fine, was suddenly put on hold for millions of people across Canada. Now, you know, what winds up happening with those people? Well, that's where we see, and I don't know if you guys have been reading the stories, but I have been hearing about like people who have been on hold for days trying to get through to apply for EI, to get the financial relief, to defer their mortgage payments. Like, it's been an absolute gong show for these folks trying to do this. Meanwhile, they still have to take care of their expenses that are coming in, right? Like these delays, it's not like their expenses are delayed. So we have this group of people that are in a really, really stressful situation right now, where because they had one and only one option, which was their direct income from their job. And when that went away, they were screwed, right? They literally had no other options. Now, then we also have people who had savings. Okay, awesome. So I have some savings. I can dip into that. I can, you know, float myself for a few months. So there's a lot of people that are in a better situation because of that. And obviously that's more ideal. But even those folks, the fact that nobody can tell us how long this is going to go on. You know, like all the provinces are now talking about their plans to come out of lockdown. But what if we get a second wave of the virus and we have to do this again in July and August or September, October? Those people that have been relying on savings, they're still feeling that stress because they're looking at their savings and going, well, how long is this going to be able to last? And also, if you've worked for a decade or longer to build up savings and now you're just watching that deplete as you cover your expenses, like, does that sound like a stable system? Is that the way that it should be? And then it takes you another decade to replace what you've used in the matter of months because you don't have access to income through your job. Like, that to me doesn't sound like stability, security, safety. That sounds like, you know, an unsustainable way of doing things. Okay, yeah. So that's the first thing I want to highlight is people being dependent on just one source of income, and if that goes away, they're done. Asil?
No, I agree with you, and I think this is unfortunately the majority of the people that are in situations like that. Like, I don't even know if there's statistics to show how many people A, have no savings at all, and B, have savings to barely last few months. And I think like where did the problem start? Is it and I guess an even deeper question is, who do you blame? Is it the education system? Is it the parents? Is it the people themselves? Like, where does this conversation start and where does it take us? Like, it's such a
I mean, we could do a whole 3-hour talk just probably on that. And it's a lot of what I talk about in in my coaching practice and stuff that I put on Facebook, because you're right, Asil. I mean, the answer to your question is it's everywhere. I mean, from the day we are put into school, right, we keep getting this message of go to school, go get a good job, right? That this is the wheel of success, if you will, here in our North American society. And for the most part, it is. And it works fine until it doesn't work fine anymore. I know personally in my life, I had 2 or 3 situations where it was just so clear to me, I don't want to be dependent on any company, who is employing me. I don't want to be dependent on my government. I don't want to be dependent on assistance programs. And I made decisions as a young man that I was going to do different things. That was not what the usual everyday, what you hear in the media, what most people were pursuing, because I didn't trust and believe in those systems. Or I was aware of the fact that, you wound up having to be handcuffed to something like a job or an employer in order to make those things work. And I was more interested in a freedom model than I was a dependency model. So I was very lucky to sort of have those experiences and people talking to me that there were alternatives to the American dream, if you will, the Canadian dream that most of us are taught. And, in terms of who to blame, there's nobody really to blame, because everybody's doing the best they can with the information that they have, right? But my whole point in this is to, and we're going to get to this later on, is to start talking about there are actually alternatives and other things that can be done. And I know that comes back to a question, something that you mentioned, Omar, and you made a great point as kind of a counter to this. So take a second and walk us through what you were experiencing around the other income.
I was relating to what Asil said. I mean, where is this problem starting from? And I think a better way to look at it is track the money and see who's benefiting. Is this system built to benefit us?
I don't think so.
Is this system built? Are we the main beneficiaries of this system? I don't think so either. And I think this is where we start to see these cracks, and it's unstable ground. And I think you're putting your finger on the pulse. I mean, this is what people are fearing deep inside. Some people are trying not to think about it. They're going through into distraction, but in generality, you're talking about things that are really touching the pulse of the people who are going through this situation. I have a ton of questions for you, Brian, but I want to first hear from you. I mean, you've taken a decision to go off the regular path and find freedom elsewhere. What are the proactive measures that people need to take? I mean, what is one thing that they can do now in order to make sure that they continue to secure themselves, because the system is not built to secure them. Yes, they may get something on the side, but it's built for another reason. It's to benefit other people, right?
So the other income one, let's start with that one, and then we'll talk about some other stuff. But the other income, so being dependent on one income, like I said before, most of us, myself included, we're taught as, I mean, for goodness sakes, my dad, he worked for a provincial government company, and he was in what is now called HR. Back then it was called personnel. He hired people. That was what he did for his living for 30 some odd years, right? So you want to talk like the message that I got as a kid, make sure you go to school and get good grades and then into university so that you can get a good job, right? These were the messages and he was right to a certain extent. But as I said, I just really started to understand through experiences I went through that just being one income and being dependent on some company to provide you with a job left you vulnerable. So what can people do? Well, you've probably heard this message 10,000 times before this crisis, right? I mean, I know, and I think Asil, you even posted about it at some point. There was already statistics out there that saying that like 7 out of 10 Canadians had financial stress before we got into COVID-19. They didn't feel comfortable about finances. They were already stressed and uncomfortable about this. Okay. And one of those things I believe is because when you only have one income, you have all your eggs in one basket. Yes. Right. So I myself have developed multiple sources of income over the years so that depending on what kind of scenario I'm in, if one of them shuts off, I can potentially turn on another one.
Yeah. I've been hearing this so often, Brian, and especially when I go down south, especially when I go to the States. people are all talking about, I want to diversify. I want to have multiple streams of income. I want to have multiple businesses. And you know, I've seen people who are opening up businesses they got a printing business, they got a spa, they got a I don't know, a trading company with Amazon, and they just 5, 6 different businesses. And I look back in retrospect and I start to think about my personal experience as a business owner. I've been doing real estate. I've been a real estate agent and a broker in total for over a decade, right? And I look at my experience and I think to myself, I wouldn't have possibly been able to make it if I didn't have the conviction and the focus on one thing. You know, I just this trend that's starting to happen where everybody wants to have 3, 4 different businesses. I feel like it's straying the youth of today's world astray because they think that this is the winning formula, but then they're caught up barely doing mediocre things and their 3 businesses versus focusing their attention on one and really excelling and then making a difference. So I have a bit of a problem with this ideology and this notion, Brian.
So when
I know that you've found success in it, and what do you have to say about that? And
See, I'll let you answer first, and then I'll take on Omar's question.
Sure. The way I reflect on this question is not necessarily by the solution is to start multiple differences. Diversifying your income, in my opinion, doesn't have to be about starting few businesses. You can be focused on one particular business, but have potential different funnels through that business in itself, plus have passive income from investments, whether it's investments in the stock market or investments in real estate. As you start building your portfolio, you're diversifying your income this way. So for example, and I talk about this with my clients as well. You know, if one of my clients, let's say, is a therapist, I tell them one of the sources of your income is the scarcity of your time being with a client, and you're exchanging money for each hour you spend with a client. But then there's different things you can do within your therapy practice, whether you want to start writing articles, whether you want to start maybe hosting workshops, maybe creating online programs. So within that business itself, there's ways to start diversifying how your income streams are and what are the different things you can start creating to diversify that funnel within the business itself, not by creating different ideas outside that context. So that's one element of it, but also setting money aside and creating that perspective that money can start working for me if I invest it in the right places. And I just want to offer one quick reflection here. Because most people don't have trust in the system, just like you're saying, Omar, is that system built for us or for us to be the beneficiaries on it? Most people sure to believe that no, the system is meant to benefit only few people. That's one of the reasons why certain people started having discomfort with the idea of wealth and money to begin with, because they perceive these wealthy people as people who are taking advantage of the system and of vulnerable people, and you want to dissociate yourself from them. So you just take pride in being almost one of those people who are suffering because you perceive it to be a noble way of living versus somebody who's taking advantage of others. And that's where people start creating really limiting belief of what that even means, that impacts their behaviors and their realities that they end up living.
Totally, Asil. You took most of the words right out of my mouth in terms of my answer back to Omar, and I love how you spin it back to that notion of like what's going on with people's mindset, because that's such a huge part of it, and that's exactly why we're having this conversation today. This is kind of like a mindset discussion that I want people to start thinking differently. I want them to start questioning things. I want them to start looking at something and going, wait a minute, like Omar asked, is this set up for me or is this set up for somebody else? Is this really the path that I want to be on? And most people are not asking those sort of high level questions, right? So, going back to what you said, Omar, I agree with everything Asil said. So I don't think people should start, 4 different businesses all at the same time. However, right, there are ways. So, I mean, I even mentioned in the beginning of this, just having savings, right? So if you have a job or you have a business or you're working on something, you should have some sort of a savings program where you are putting aside money for savings. That can then, once it reaches a certain level, be deployed into different types of investments. And then if you're doing some sort of a diversification inside investments, like Asil said, then that could be something that you're depending on. Now, the truth is that's exactly what's going on for me. Okay, I've been doing this for 16 years. I have built up a number of different assets in different types of investments, and some of those might still be affected by what's going on with this crisis, but other ones are actually doing fine or built up to a point right now where I can start to draw from them rather than having to depend on the government and being on the phone for 4 days to that sort of thing, right? I haven't applied for anything, and I'm not saying that to brag. Any of these bailouts or assistance. It's just, first of all, I don't want to take it away from somebody else who needs it. And second of all, I'm not in a position where I require it. And that's because of the work that I've done over the last 15 years of diversifying and creating those multiple sources of income that I can draw on at different times. So that's the number one thing that most people can do is just, and again, this is not new language, start saving, start investing. Start saving, start investing. It has to be part of your plan. And everybody who says, oh, well, there's always more month than there is money or all my expenses, I say BS. Okay, every single client that I've worked with, we've been able to find something in there that if they make a choice, right? Everybody is investing in something. Some people are investing in their shoe collection. Some people are investing in cars. Some people are investing in their pool in the backyard or their fancy basement or whatever. Right? Everybody is investing in something, but most people aren't investing in alternative sources of income, right? Or other money that they can draw on.
I would take this even a step further and say, even before you start investing and saving, the first thing you need to do is strengthen the belief that this is a possible reality for you. Because if people start investing and saving because they're motivated by fear of not being in a situation that they're very dependent on the government or they're just losing hope and the sense of security, then even when they build a comfortable saving or investment like nest for them, they're going to find a way to lose it if it's driven by the belief that this is not something that's accessible for us. And I'm a member of the Financial Therapy Association, and we get on a weekly call to just touch base with each other and share resources and stories and client cases. And the sheer volume of wreck that's happening right now of people who had a really sizable saving account that's being like lost overnight because of just really like unacceptable risk people are taking so blindly. It's just blowing my mind to what people are doing.
So that is another section that I want to talk about, and maybe this is the perfect time to do this, just because you brought it up. So a second topic for me, and I recently posted about this on Facebook, is almost everyone listening to this probably has airbags in their car and other ways to avoid collisions or to mitigate the damage in case of an accident, right? Cars are loaded with all these things nowadays to help us in case of an accident. Most of us have home insurance in case of flood or fire or something like that. We've got medical insurance, which allows us access to care ahead of time. But then if we do get sick, we'll also pay for things. And then we've got things like critical illness insurance and income replacement, all these things. All of these fall under the umbrella of protection and then mitigation should problems still arise, right? And none of us could imagine living without these things at this point. If I came to you and I said, let's give up your car insurance, let's give up your house insurance, let's give up your medical insurance, there's no way that people would do this. In fact, to get a mortgage, you have to prove that you have house insurance. So the banks are also clear that this is very, very important, right? Nowadays, you can't get a mortgage unless you've shown that you have insurance in place. So why is it that in our investments, and what you talked about, Asil, the main way of investing in the stock market through mutual funds and individual stock investing and bonds and all that, there is zero protection strategies in that to protect and then mitigate when we have crashes and downsides. Now, I know there will be people out there that will say, yes, there's diversification strategies and all that sort of stuff, but it doesn't work clearly. When we have a crash and 90% of the people who are invested are losing 20, 30, 40% of their portfolio and basically giving away all the gains or most of the gains that they've made in the last decade since the last crash, you have to ask yourself, why do these super smart, highly educated people who run our financial systems, how is it they've never been able to come up with a mechanism for the average investor like you and me to be able to protect against the downside of the up and downs of the markets? And why aren't people running into their bank and demanding this? Hey, if you want me to invest in mutual funds, protect me against the downside. Offer me something so that when we know these markets are going to crash, it's not like this is a mystery, right? We know this is going to happen. For the last 2 years, people have been talking about we're due for the next crash, we're due for a recession. So these things aren't surprises, but nothing is done about it. And then what does the industry tell us? Well, just come back in. Yeah, you know, we're gonna get back on the upswing now. And like blind little sheep, we just go right back to, you know, I was joking about this with other people. It's like the three little pigs going to the big bad wolf to help him build our next house that he's just gonna come and blow down and in a few months later. Okay, yeah. Why do we put up with this and take on this unnecessary risk is beyond me. And again, the answer is because most people don't even they've never even had the conversation or asked the question of, wait a minute, you mean there are ways to protect my investments so that I don't lose money the next time a crash comes around?
That's amazing. I think that thought process is a paradigm shift on its own. I think that question, you know, there's insurance for absolutely everything. There's insurance for earthquakes. There's insurance for insurance companies falling apart. There's insurance for everything. But why isn't there insurance for you know, like you said, the downside of an investment? And that's a great question. I mean, these kind of questions are what kind of build up mega businesses and industries. You know what I mean? And I'm curious. It is a very powerful question, and some of us don't see this kind of. It's hard for us to kind of perceive that it could be tomorrow. So, how are people to insure? We talked about the multiple income streams, and I see the distinction here with multiple income. I think the main distinction is multiple passive income streams, where you're not really trading your time. You can build the next big business when you have a found strong business that's already standing on its feet. But what are other strategies that you suggest in order to securing yourself? And Asil, do you have anything to say about what Brian shared?
Yeah, because I obviously reflect on the days where I used to be a financial planner, and here's the take on it. So mutual funds made it so much easier for people to participate in investments versus buying individual stocks, because you are putting your trust in the fund managers and they are doing the investment decisions for you. And as a financial planner, our job was to assess the risk that people are capable of handling, given the life goal we're talking about, their security of cash flow in their life, the time horizon, and different elements that take you know, a picture of that take place in creating that investment picture for them. So the idea was for people who didn't have much of a reliable income or needed an emergency fund, we always suggest that you build your emergency fund first, and then you start working towards your medium-term goals, your long-term goals. And like I am a little bit confused by that, because there are investments out there that are not very risky. There's low-level risks investments for short and medium-term goals. And even if the market crashes by 50%, depending on the portfolio you have, sometimes you're just down 5 to 10% and then you recover. Like, the idea is not to sell your investment when they're down. You just wait for them to recover, and that could take a few months or a few years depending on the risk and the recession that we've hit. So I've seen people recover just by waiting a little bit and then continuing on the upward trend towards their retirement goals. So I am a little bit confused by that.
So let's see, I have a couple of questions for you. So
Mhm.
the first question is, those so-called less risky or more safer investments, what's usually the other aspect of them, which is almost across the board? If you're going to go into a less risky or safer investment, what is it you're going to give up?
Return.
Right. So it's almost always like there's this one-for-one equation where safety means low returns, risk means higher returns. Yet the banks themselves, which are not investing in the same things that they're telling people, they don't invest in GICs and savings accounts. That's not where they're putting their money. Yet they manage to somehow protect their money by the fact that they're making billions every quarter and they're not on the same roller coaster ride as their clients are. And yet they also still have high returns, right? If you actually, and you can Google this, the actual returns that the 5 Canadian banks are making average 10 to 15%, yet they're not losing money. And what's Warren Buffett's #1 rule for investing? I see this quoted by hundreds of millions of people. Rule #1 is don't lose money, right? And rule #2 is see rule #1. Is Warren Buffett known as a guy who settles for 0.1 or 1.75% or puts his money into GICs? Okay, so this strategy that we're being taught is not what wealthy families and even the banks and financial institutions themselves follow. Yet that's what we've been taught. And that there's this one-for-one equation of risk equals high returns, safety equals low returns, which again, I'm calling BS on. It's not actually true. And I can point to all kinds of examples of people, myself included, who still continue to make high returns, yet we can also protect the money, at least our capital that we're starting with, which again is what Warren Buffett's strategy is. If you read anything about the guy, he never went into investment. His #1 thought was never, what's my return going to be? It was always, how do I protect my capital? And then he looked at this. But this is not what the average person is taught. You go in, you answer 3 questions, or nowadays it's even online. You answer 3 questions online and somehow, right, this strategy is created for you. One other quick note is in terms of the fund managers, I know Warren Buffett put out a challenge several years ago about he was just going to invest in the indexes, the S&P 500 index, and he challenged the world's best fund managers to see who would win. And they had a $1 million bet that was going to go to charity. And for a decade straight, Warren Buffett, just by putting in the index, he did absolutely nothing. He beat the best fund managers in the world with his returns. And if you actually, again, this is something you can Google. I'm not making this up. It was crazy. Like how much he was beating them by. But people were paying hundreds of thousands or millions of dollars to have these fund managers look after their money for them.
The reason I'm asking these things from the space I'm in, the reason I left financial planning in the conventional way I was taught it is because I started recognizing these cracks and realizing that something is really missing in what I'm learning and what I'm teaching. I'm a middle person in that equation. I learn from the books and from the training programs, and then I'm teaching people of how to invest and how to manage their money. But I felt something really missing in that equation. So I stepped back and I said, I don't think this is a full picture. And I really started wanting to explore money from a psychological and emotional relationship with it, while I just examine what is really going on here. So this is a really sensitive topic for me. It hits right home because I hear you so clearly. And at the same time, I have more questions than I have answers at this point.
Brian, I know that you have a few other kind of game-changing topics to touch on, and before we're done, but like I'm sure our viewers are very, very curious. Give us a couple of nuggets about how do you secure your money when you're investing?
So it's funny as well, and I'll try to make this as quick as possible. And if somebody wants more details on it, I can certainly do it outside of the scope of this. But again, we don't have to look very far to see two examples of how you can protect. You can start to implement a strategy of protection. And guess who's doing it for us? Your bank. Okay. When you go to get a mortgage for your house, there's two things that a bank absolutely requires from you. The first thing is collateral. Okay. The bank is not going to give you a $400,000 mortgage unless they can put something of equal or greater value as collateral against that money. Because basically what they're doing is investing in you, right? When they give you a mortgage, you're paying them interest. That's an investment by the bank. So they require collateral. In this case, the asset or the house itself is put up as the collateral. And everybody understands this as, if I stop making my mortgage payments, the bank will take away my house. So the bank asks for collateral, thereby protecting the money that they are investing. Okay, so they know they have something that they can take back if you stop making your payments and default on the mortgage, where they're not going to get their money back. So that's number one, is ask for collateral. It's an incredibly simple concept, but it's not being taught. The second thing that banks also do is, and you know, Asil, you can, well, and Omar as well, given you're in real estate, how much will a bank go in terms of a maximum? So if I have a $500,000 house, that's what I'm purchasing the house for. What is the maximum amount of the mortgage that the bank will allow me to do?
Well, you can put 5% down, and it's encouraged to put 20% down. There's programs for first home buyer.
Actually, that's a bit of a misconception. The bank doesn't allow you to go just to 5% down unless it's insured, CMHC, right?
Yes.
So a bank will only ever go up to 80% loan to value, meaning that they will only loan on that asset that they're using as collateral up to 80%. So in this case, if it's a $500,000 house, the most mortgage they will give you is $400,000. Yeah. Why do they do that? Because if the real estate market suddenly turns around and has a dip, they want to know that their money is still okay. So if you bought it at 500 and then we have a situation like we're having now, where let's say there's a 10% decrease in real estate, right? The bank's money is still protected. So not only do they have a firm asset as collateral, but they create a buffer there, so they still have a level of safety. Or put another way, they're buying at a discount. Whenever I'm going into investments, I don't want to pay retail for it. I don't want to pay the full price, because then if there is a price turnaround immediately, it's dipping into my money. Okay, so buying at a discount or you know, not going up to the full level and asking for collateral. That's two examples that your bank is doing with you, and everybody on this call who has gotten a mortgage has participated in this. That's two examples of what protecting your capital looks like. But how many people are being taught this by their bank or their financial company when they're going to look for investments? Mm-hmm. Mm-hmm. And imagine going into your bank and saying, okay, I'll put $100,000 into mutual funds, but I'd like to get some collateral. The bank person would laugh you out of their office, right? And by the way, I'm not meaning to pick on banks or the people who work in banks. I mean, you're a great example of this, Asil. As a financial planner working at one of the 5 big banks, did you have your client's best interest in mind?
Of course.
Were you honestly, legitimately, and sincerely trying to help these people and trying to have them reach their goals and get ahead?
Yeah, 100%. And most of my colleagues, I would say, are in that boat.
Absolutely. And that has been my experience as well. Okay. It's not the people that are, you know, trying to rip people off or the enemy or to blame or anything like that. But I say that the industry itself is broken and has cracks in the foundation, which is what we're talking about today. And there's things about that have changed over time to make it not as advantageous for us as it used to be. You know, my parents and my parents' parents, the relationship they had with their bank and what the relationship I have is very, very different. Okay, so that's really what I'm trying to point out, and that's 2 examples of protection. Now, go ahead, Omar, and then I'll.
Yeah, I think there's another very noteworthy belief system that exists in Canada or in the Western world. I see a lot of people stretching themselves too thin. You know what I mean? I see a lot of people, they're pushing themselves to the limit. This is how much I qualify for. Let's go all in, right? And then they leave no buffers. And what do you have to say about that? Do you think Tell us a little bit.
You're absolutely right, Omar, and that is the next thing that I wanted to talk about and what I see here with people, right? So we've already talked about if you have no other sources of income, you're immediately vulnerable, right? If something happens, you lose your job, whatever, something happens, you're kind of screwed at that point. Another thing about that is there's no protection of those investments. So like Asil was saying, even if I've built up assets and investments, like a big majority of it could be wiped out with the next financial crash, which is exactly what we've seen here. We weren't in the middle of a health pandemic. We were also in the middle of a financial pandemic at the same time. So you wound up with, the perfect storm. So here's another thing that almost made it the trifecta, right? The triple effect here is access to debt, okay? So now, I still believe that people should have like a rainy day fund or savings or something like that. And when all else fails and you find yourself in an emergency position, one of the last resorts can be access to debt, okay, to get myself through a tough time. This is actually what credit cards are supposed to be for, right? If all else equal, my car dies in the middle of the month and I need to use it to get to work, and to be able to put down my credit card, pay for my car payment, and know, okay, I've got 30 days to figure that, right? That's what debt can be utilized for as an overall strategy, is in times of crisis, it's there for me.
I think that's what 99% of the people use their credit cards for, no?
Oh, yes, that's exactly what people are using their credit cards for, Omar. Yes, all the good little diligent, well, okay, so let's get into some real statistics. And again, if you've been following any headlines about finances in Canada over the last 5 years, you already know this. The what's referred to as the ratio of debt to income, which means how much debt we have versus how much money we have coming in, has been at alarming rates for the last few years in Canada. I said it's $1.50 of debt for every dollar of income, but it's actually higher. It's almost $1.80 of debt for every dollar of income that Canadians have been carrying for the last little while. Okay, and and it's the highest in the G7 countries as well. So as you can imagine, if you're walking around with $1.80 of debt for a dollar of income, that's a precarious situation to be in. You're just asking for trouble. If there is any kind of ripple that happens, any sort of crisis that happens, then Canada is poised for that illusion of security to pop, and suddenly we're in dire straits. Never mind a global health pandemic that shuts down the work of the entire world all at the same time. Like, you want to talk about, of all the crises that could have come to pop the bubble that Canada was in, this probably was the mother of those crises. Okay, so for the past, however many years, we've been taught what's the secret to success in a capitalist society. Consume, 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 spend, spend, spend. And you said, Omar, people don't pick the house based on like what is the best house for them. They pick the house that they can just barely afford, right? The maximum mortgage. That's what you get quoted when you go to the bank, or you speak to a mortgage person, or that they're going to tell you the maximum. And then most people were going ahead and locking in at that maximum. But there again, we're not preparing for a rainy day, right? So in a time of crisis, again, people who have access to debt right now are able to weather the storm. If I have to use maybe a line of credit, or if I was able to go to my bank and apply for, or I already had in place a HELOC, which is a home equity line of credit, you're basically tapping into the equity in your home and using that, or worst case scenario credit cards, I would be able to float myself through the 1, 2, 3 months, right, of lockdown that we're experiencing. But most Canadians had already utilized all of that. They were already using and maximizing lines of credit, HELOCs, credit cards, debt from family members, borrowing, all this sort of stuff, which left them no room to be able to deal with a crisis, to be able to deal with a rainy day. And we are in the monsoon season right now, yes. Right? So again, this is not new languaging. I've been talking about this. You see this all the time. But like, if somebody right now wanted to look at what could I start doing today so that I would be better prepared for a future crisis, be that, this summer or 5 years from now or whatever, that would be start looking at additional sources of income. So you're not just dependent on one thing. start looking for protection of the assets that you do have, and stop utilizing debt, right? You want to talk about an illusion? There's an illusion of success. Everybody's got a beautiful car, a giant house, a pool, all their kids going to private school, decked out in the beautiful clothing and all that sort of stuff. But it's an illusion of success. And we're seeing lots of millionaires that are now having to apply to the government to get through the next 2 or 3 months. Well, then that wasn't real. That was an illusion of success, an illusion of security that existed.
My favorite part of your question, Brian, is what can you do to make sure that you're equipped for the future? And the reason I love that question, the way it's phrased, is because it puts the answer and responsibility in the hands of the people versus what should the system look like, or what is the world, how does the world, how can the world change and in what direction? These are things that make us feel hopeless, because when we're thinking about things of such macro magnitude, it's not something that we potentially have immediate and short-term impact on, versus things we can necessarily start doing right here, right now. So I love the word you phrased that question, and I think this is what each and every single person should start asking themselves. Take this time to reflect deeply on how was your life built and why was it built the way it is, and more importantly, how can it change in more intentional and mindful ways so that the future seems a bit more an expression of who you are and the life you want to lead, and in ways that you have more control over.
Yeah, and going back to the three little pigs, right? If you have a house of straw, the first wind is going to blow it down. A house of wood, okay, maybe you're going to make it through some of most of the storms, but the gigantic storm, it's the house of brick, right, that is able to withstand the storms. And that should be the goal of people, is building your own house, your own financial system to be able to withstand the majority of the storms. Is there a guarantee on it? No, absolutely not. You can't account for everything, but there's tons of things that you can account for that people like me have been jumping up and down and screaming about for years, and people aren't listening. Well, now all of a sudden we have their attention, right? When they're on the phone for 5 days with CRA trying to apply for EI or whatnot and wondering, how am I going to feed my family? I recognize that I have your attention. Now you're wanting to find out, how can I crisis proof, which is probably a program I'm going to build in the future. How do I crisis proof myself for future events, right? Absolutely. Omar, you had something.
I relate a lot to what you're saying, because we deal with this day in and day out. I mean, I'm in a business that deals with people's highest, the highest price tag that somebody would typically put on something as a house, and we deal with houses day in and day out. And I think I create a separation when I talk to clients. There's a certain psychology that you have to follow when you're dealing with investments, and that there's a certain psychology that you have to follow when you're dealing with buying your own personal place to live. I think there's definitely a fine balance, Brian, between how secure you want to be, how conservative you want to play, and how you can be just following, going without really any concern. But I think there's a fine balance there. And when it comes to a home, when you're buying your own personal residence, I think the environment that you surround yourself with, being in a place that you feel proud of, is a huge catalyst to your success. And I feel like that environment is it's a confirmation to you every single day that I've gotten to where I want to get to today. I think the problem is not that, I see people in Lebanon, for example, they have no access to debt because if they need to buy a property, they have to come up with 100% cash.
Which is what it was for us in the old days, right? Like you go back 40, 50 years ago, that's what it was like. If you didn't come up with that, you didn't get a house, period.
That's exactly it. And if you look at prices in Lebanon, they're almost the same as prices in Canada. So if you look at Beirut, for example. So can you imagine what kind of a disadvantage somebody has to live a lifestyle that they wish upon themselves when they have to come up with, prices that we talk about here? But the point that I want to make is that the problem is not that people are taking advantage of loans in order to finance lifestyles that they want. I think today more than ever, people want instant gratification, and they want to go straight to that 5,000 square foot house with three car garages, right? And you need to pace it out a little bit, and you need to be honest with yourself. I mean, this could be my 10-year vision or 8-year vision or 15-year vision, right? It's okay to get into a semi-detached that offers my family enough space to function the way that I want, plus be close to the conveniences that I need in order to have a happy life. This could be my transitional point. I think that's a big problem today, is people are overstretching themselves, trying to get to the end goal and just trying to jump all the steps in between. But I personally tell my clients that once you buy a property, you want to feel proud of that purchase. It's very important. You're buying your home. And investment's a different story. How you leverage when you're dealing with investments is a very different story. But when you're buying a house, you want to be happy with it. And sometimes, you just need to look, you need to extend that timeline a little bit. And you need to put things in proper perspective. And what's more important, I don't want to say it's more important, I think it's very important for you to have a fund for the rainy day, a safety fund. But what's also very, very important is for you to have an amount that you can save on a monthly basis, right? I think that's the key. If you're not taking into consideration, okay, this is what I qualify for. Have you kept any money on a monthly basis for you to be able to save? Because as soon as you take away, the idea of a future, now you're sabotaging yourself. There's a huge component of happiness that comes from progress. So you need to be able to plan ahead. And you buy this house, and what's next for you? What's the next step? And it's all psychology. And
I couldn't agree more. I couldn't agree more, Omar.
I agree. And what I'm really hearing is that this topic is so juicy and so deep, and there's so many layers of it, that it definitely permits another episode where we get to explore even more things. And, we left a lot of questions, and I'm sure that whoever's listening to this also has lots of questions. And I do too. Like, these are things we may not necessarily answer overnight. It's just important to have the courage to ask questions that are important to be asked, even if you don't have the answers for them. Because once you start asking questions, you create a space for exploration, for curiosity, and for an intentional life versus one that you're just reacting to things outside your control.
And before we wrap up, Brian, give us an idea of, we've already agreed that there should be a second episode over here talking about this topic, but arouse our curiosity a little bit.
Yeah.
What do you think we should be talking about on the next part two?
I'm gonna give you a Netflix cliffhanger Game of Thrones teaser here for the next one. Absolutely. So by far, when I start to share some of these concepts, the first and most question that I get is like, well, what else can I do? What other alternatives are there? If I'm not going to do this typical, stocks and mutual funds and all that sort of stuff, what else is there? And the answer is, there is a whole other world. A friend of mine once said to me about 12 or 13 years ago, she's like, it's like you've pulled back the curtain to where the Oz lives, and there's a whole other world that other people don't know about. And it's true, there is a whole other world. So in the next episode, I want to introduce people to some of those things that I've explored, that I've researched, that I've learned about, that I'm implementing, that do offer alternatives. And in some cases, I don't know if solution is the right word, but it helps to fill some of those cracks in the foundations that we're discovering in the system as we have it today. So that's definitely what I want to talk about on a future episode. And I just also want to mention, Omar, because you hit the nail on the head with instant gratification. By far, that is one of the biggest systemic challenges or problems that exist in our society, is that instant gratification. And it's not our fault. We get reinforced by this, by media and advertisements, and everybody should immediately have everything, And I'll give an example. So today I drive my dream car. It's a Tesla Model S. Okay. But that was on a 5-year plan. And I drove my Kia Sportage for those 6 years while I worked towards making that. And it was about not, oh, well, everything is going to go to me having a Tesla and now I'm vulnerable in these other areas. No, I was building my brick houses and sheds and all this other stuff over here so that then getting a Tesla was part of the overall strategy and it fit in. It wasn't going to hurt me. And again, the proof is in the pudding. I'm not being affected in this financial crisis like most people are. And again, I'm not trying to brag, but if I'm going to teach it to somebody, I want to do it first and then show them what I've done. So I completely agree. I love this exploring this stuff with you guys. You guys ask such amazing, phenomenal questions. I hope our viewers have gotten some stuff out of this as well. And I'm really excited about taking it a step further. So thanks, guys.
Yeah.
There you have it, folks. Tune in for the next session with me, Asil, and the Wizard of Oz himself, Mr. Brian. I can't wait for the next session. Thank you, guys, and have a great weekend. Take care.